the whole group in progressing clean energy entrepreneurship. As you can see here on the screen, Momentum is a clean tech consultancy. We're based out of Sacramento, and we specialize in designing, developing, and deploying innovative funding campaigns that help move clean technology forward. Since 2005, we are in our 20th anniversary. We've helped facilitate more than $10 billion in federal funding, but also in other mechanisms. So we're happy to continue that work with the family of companies that you see here on the screen, Fuse and Giraffe. And just before we head to the next slide, you can learn more about our work at buildmomentum.io. Next slide. Thank you. So just a couple of quick reminders about our workshop today. We definitely encourage you to engage in the chat. Thanks for telling us where you're from. Be sure to include the name of your company as well. We want to hear more questions and comments as we move through this time together. For specific questions, though, please use the Q&A box so that our panelists can ensure you see them and answer them when we get to that section. Of course, we're all friends here, colleagues, and we ask that we use both of those features respectfully. And if anyone you know is missing, we'll certainly record this and get it on our blog so that you can share all of the good tips that we'll have today. Next slide. Thank you. So I'm honored to introduce our moderator for today, colleague, brilliant friend, Mike Viparian. He's a senior advisor at Momentum, and he has over 40 years of experience impacting California's environmental and energy policy landscape. Just a couple of names to name a few. He's been the ED of the California Pollution Control Financing Authority. He's a consultant to Climate Bonds Initiative in London, and he was also deputy treasurer for the state of California, where he enhanced small business financing, improved environmental bond financing, and also implemented grant programs. So a lot of info there, and Mike will lead the charge in getting more out of our great guests. Welcome, Mike. It's all yours.
Thank you, Kula, and thank you, Elisa. As you know, we're talking about alternative VC today. And we're defining alternative VC as funding models that diverge from traditional venture capital structures. And we're going to dive into what that really means and get a little more definitional information as we start this session. We wanted to ask a question of everybody as you're putting information in the chat about where you're from, what your name is, what your organization is. If you could answer the question, what's one challenge you're facing or anticipating in financing your clean energy venture that you hope to get some insights on today? I think that will be helpful to us later on as we address some of the questions that we see in the chat, and you might actually stimulate some discussions between each other in the chat. I'm going to introduce the panelists and then dive right in. So we have three wonderful panelists. Dave Smith is Vice President of Growth and Partnerships of Enduring Capital. He is an innovation strategy and business development leader with over a decade's experience in the impact space, working with startups, growth stage companies, and multinational corporations. He's helping to drive resources to and break down barriers for entrepreneurs solving pressing global challenges. Dave is also a classically trained chef who can whip up some of the best meals you've ever had. Dr. Mark Hartney serves as a partner with Breakthrough Energy Ventures. Dr. Hartney has been involved in technology innovation throughout his career in research and development roles, successful startup companies, and as a federal program manager. Dr. Martin Hartney actually served for a short time at the very beginning of his career in the White House Office of Science and Technology Policy for both Presidents Clinton and Bush at a time when it was fine to serve both an outgoing Democratic president and an incoming Republican president. He also served on the team at DARPA that helped advance the manufacturing of LCD and other technologies that we all enjoy today. Finally, Derek Tang is Deputy Director of Venture Capital for the California Infrastructure Bank, the iBank. Derek was appointed by Governor Gavin Newsom to lead California's inaugural public venture fund, investing $250 million in underrepresented entrepreneurs, underserved communities, and climate justice solutions. What you may not know about him is that early in his career, he put his chemical engineering degree to use when he worked on developing carbon capture technologies nearly 20 years ago, before carbon capture was a thing. So let's dive right into it. We do have a lot going on right now. I know it's hard for me to unglue myself from the screen to see what's going on in Washington, D.C., and it's very anxiety producing, as I'm sure everybody here is experiencing. Um, with all that's going on right now, um, let's try to address this elephant in the room. Um, Derek, I know that you've received some federal funding and are hoping to get additional federal funding to deploy in some of the programs you're in. I wonder if you could start us off with how these changes in Washington seem to be affecting the types of companies that are joining us today.
Thanks, Mike. And it's great to be here. I think anyone's guess is as good as mine in this case. We're kind of all on the same ride together. General themes would be, I think, to have patience and know that a lot of people are asking the same questions. When you do get into it, I think there are different levels of risk that probably correlate with the labeling of the funding, to be honest, because that's how political it is. So things that are attached to EPA are probably a bit more vulnerable than things that are attached to small business. And so we know that firsthand at iBank, where we're a state agency. My venture program is funded with federal funds, but it's small business funds. And further beyond that, it's the money's in our account for the most part, where 2/3 of the money is, and the rest has already been under contract. So I feel pretty good about that. iBank just announced a green bank that's going to be very aggressive this year, especially. Those funds are also in our account, but they haven't been spent yet. And I think there's also buffers as far as layers of nonprofits that are above us as the primary contractors. So there are these intricacies, and you'll get into it as you find out more details. But just know that obviously the mood right now is chaos, and things are coming and going, and I'm sure there will be more changes in the future. But I think what will persist is that similar to not the last time this happened, but the last time something similar happened, California becomes more important. Kind of leading up to this, there were already announcements to pick up the slack as far as things like EV tax credits and rebates like that. That there will be more of that, and I do hope also that there'll be these waves of more philanthropic and private funding to make up for these gaps. So these crises will be frequent, and you just got to be prepared, I think, to take advantage of that, and also just to be kind to yourself and others at the same time.
Mark, Dave, anything to add on that?
Uh, may you live in interesting times indeed. I think everyone's in the same boat where we're eagerly awaiting the next announcement of what's been pulled and then reinstated, pulled and reinstated. As an entrepreneur trying to navigate that, understanding what your other avenues towards capital are. I know at Enduring Planet, we have our government advance funding that might be available to some folks here who are dealing with delays in their federal reimbursements or milestone payments. Just check us out at Enduring Planet. But understanding your best case scenarios, like what happens if you are getting paid on time, but having a really deep and robust look at your financial model and understanding like what happens when and when you need to start cutting back. I'd say like one theme that you'll probably hear a lot of in the next couple of days to weeks is that it's much easier to find funding when you don't have like 3 days of runway left. So understanding your capital stack now and making preparations and putting things into place before you're in trouble and before like the rug gets pulled out from under you, I'd say is a really important thing to be doing now.
Great. Mark, anything to add?
Yeah, I mean, I'd say a couple of things, and I would so I'll make a minor correction to your intro. I was with the first Bush in the transition to Clinton, so it was a Republican to Democrat transition, not the first one, which actually adds another 8 years to when you thought I worked there in
Thank
terms
you.
of time. But you know, transitions are always challenging, and lots of things happen, and things are a lot more chaotic this time than they were even in the same kind of transition 8 years ago. And 8 years ago, when Obama left and Trump came in, I was actually working at Stanford at SLAC at a DOE lab, funded a lot from places like ARPA-E and EERE. And to Derek's point earlier, we actually did a pretty strong pivot to studying organizations that were very happy to pick up some of that slack, felt that it was important to do that, and turned out to be, you know, some of the better projects we ever ran. So I think that's one thing. I see the other thing I would say is, you know, now as a venture capitalist talking to companies and actually talking to other funders who are I'm based in Europe now, and so talking to people here who kind of look at and go, well, what's going to happen? Isn't the market going to fall apart? And the reality is the government is not the sole provider of what you need as capital to get this done, nor do they dictate where you're going to put your money. The reality is that the economic interests are all pointing towards renewables are the cheapest power we're ever going to find. Plenty of people are looking at innovative solutions for climate, whether it's carbon capture or crop science or biotechnology. I mean, there's so many things that present compelling opportunities for the future that it's economics that drives decision making in the real world. It's not politics. And so I think if you've got a good economic story, a good projection, I think focus on that and ignore what's going on with the sideshow in DC right now.
Great, thank you. And Mark, I'm going to put you on the spot in terms of telling us what it is we're talking about today. What is alt VC, and what does it mean in the context of the type of funding that folks on this call may be seeking? And I'll check with Derek and Dave on this too in a minute.
Sure. So, you know, and recognize that now I'm not an alt VC. I'm a very traditional VC. So I come at it from a little bit of a different perspective. But you know, if I think about some of the things I participated in early on in my career, both ARPA-E and DARPA, you know, it's federal grants that go out to early stage technologists who come in with ideas. You know, I spent a lot of time when I was in the Bay Area as a mentor to different programs at both Berkeley and Stanford. Things like Cyclotron Road, which became Activate, and the Tomcat Center at Stanford. So you know, universities have support for particularly graduate students looking to incubate and propel companies, and they can be small grants, but they can put you together with a lot of really bright people that help hone your idea, which is really important at this early stage, and the stage where maybe, you know, I don't know the demographics on the participants here, but you know, if it's the Cal Seed community, that's an early stage, and you're really trying to test the merits to see whether your idea is something which can become investable, and you want to do that with non-dilutive funding if you can, first and foremost, and then you want to do it, you know, figure out what the real challenges are, and see if you can solve those problems. Because when you get to the point where you're going to go to a real VC, they're going to zero in on those things and really challenge you on them. And you want to be able to say, I've got the evidence, or I've got the proof, or I've got answers to the questions that you're going to need to pass before you get to the stage of moving into more traditional VC. So I think, you know, looking for avenues to do that. One of the stories that I like to tell, one of the companies that's in our portfolio was applying for an early ARPA-E grant and tried to get some philanthropic funding for a cost share. And one of the person at the foundation said, why are you bothering applying for this grant? I'll give you the value of the grant, right? I mean, instead of getting 100K for $1 million, 10% cost share in $1 million program, they said, I'll write you the check for the $1 million. And we can start today. You don't even have to apply for the grant, right? So not everybody has that pot of gold like that at the end of the rainbow, but that was a great start for them. And it just shows you that what the value of connecting and understanding those parts of the ecosystem can bring to have impact on what you're trying to do, particularly at an early stage.
Great, thank you. Dave, anything to add on what is alternative VC? Alt
Ah,
VC?
I mean, anything that's not strict diluted VC investment, I think like there's so many organizations that brand themselves as catalytic capital or project finance or earlier stage things or folk finance these days that could fall into the buckets of alt VC. I think it's one of those words that just kind of means whatever you want it to mean these days. But that said, like now more than ever, especially given the shift in tenor of the administration, you're going to be able to find people who are looking to allocate dollars towards climate solutions that were once held up by federal dollars. I think that we'll see a lot more movement in the space. So keeping your network active and making sure that you're constantly surveying the ecosystem for new opportunities that are arising as a result of changes in policy and administration is going to be like a full-time job for a lot of these teams. I'd say that looking towards states to pick up a lot of the slack. So I'm looking at new state grant opportunities and non-dilutive funding in that sort of the world, looking at unique debt opportunities. Like debt is not a bad word for an early stage climate business. I think adding debt to your capital stack in a way that allows for other participants is also a very interesting opportunity. So looking at security positions of debt providers and how you can collateralize different assets as part of your capital stack is going to be like the new Tetris of building your the financing for your climate startup. But just having like networks like this come together and provide ecosystem maps of like the kinds and flavors of capital available, keep coming to webinars like these. I know that you can be doing other work in the background, getting through your inbox as well, but you might just hear a couple of things that are like, I haven't heard of them. I'll check out their website and then maybe they'll give me $1 million on a whim, like Mark was alluding to as well. Those things do happen.
And Derek, any additional thoughts on what is alt VC?
Well, I'm glad I got to go last because I had to Google what alt VC was, and I think all the answers were covered. But so the only thing I would add is that even within VC, sometimes there are VC funds and firms that you haven't seen before, and they can surprise you. So I think there are things about the VC funding model that are going to be true and pretty universal as far as the return profile and things like that. But having said that, running a program with a mandate to support underrepresented VCs that often brings up models that are quite unique. So a couple examples we have from our investments that we've actually made. One is a fund called Indie VC, where they do traditional VC, but also they've built in some optionality for founders so that they can purchase back some of the equity at later stages because they recognize that the traditional VC funding model and that life cycle is not for everyone. Another fund we backed is called Unshackled Ventures, which has a pretty typical VC financing model, but they focus on immigrant founders. And part of what they offer beyond their investment is full immigration support, even going so far as visa sponsorship. So that's certainly not traditional, and they're not even an impact firm. They're going for those venture returns. But it just really shows that that's part of their value add, and that's part of how they attract what they would call it their differentiated deal flow, because they offer these things, because they understand something that's unique to a specific customer set, entrepreneur set that they're trying to serve. So I think the takeaway for me is even within one asset class, there could be creativity in how things are structured, but you do have to go out and find it and learn that from networking.
Great. So for the folks on the call, how can the entrepreneurs determine if alt VC is a good fit for their goals? And I'll turn to you, Dave, to start that one off.
Oh boy. Small question. Make sure that the trajectory of your business aligns with the return profile that your investors are looking for. Obviously, when you're looking at folks in like the debt ecosystem, their rates of return are fixed. They're only going to make a certain amount off of you, but they have stricter timelines in which they expect those returns. If you're looking at more traditional VC plays, make sure that when they expect an exit is when you expect to exit your company or provide liquidity in some regard. I would say understanding what bets these alt VCs are placing, why they're placing those bets, and what they expect to see, and then aligning that to aligning your company's trajectory to that, and instead of like, well, what I'm trying to say here is don't shift your company's trajectory to try to fit into their model. Find models that fit what you want to the direction of your company to go. There are going to be folks that finance companies in the stage you are. It is your job to go find them. It is not your job to fit your company into a box that's going to push you in the wrong direction and not have the impact that you actually want to have with your firm.
Great. Mark, Derek, anything to add on that?
I mean, I think that's good. I think that, understanding the foundational world can be really good. And we didn't talk a little bit about, incubators and even pitch deck competitions. I mean, I've seen a lot of companies get their start through things as simple as that, right? Or hackathons, depending on what it is you're trying to do. But there are lots of ways to kind of go get validation, recognition, and support for your ideas that help you build momentum early on that can be important to you and connect you to people who can be partners, employees, access to more funders. So like Dave said, there's never been a more important time to kind of keep those networks going and growing and reaching out and letting people know what it is that you're doing and trying to broaden the community of people who know about what you're doing, care about it, and can point you in directions that can be fruitful for you. So that's a big part of everybody's job as an entrepreneur.
Yeah, I think
Great.
similar to how you do customer discovery for your startups, you have to do a very similar exercise for your investors and funders. So you get to know, who are the key people, what are their KPIs and metrics, what matters to them, and ultimately you have to understand what's important to them so that that person would want to give me money. And I think that's by doing that exercise, you can be strategic with your time and resources and try to focus those efforts on where you're most likely to find success.
Great. And then so before I jump into the next question, there's been some comments in the chat about people having some technical issues seeing all the faces, and I'm told that those are hopefully fixed now. Technical folks are seeing what's going on in the chat to answer that question. So if there's still any issues, you can go ahead and comment in the chat, and they'll see that and try to address that. So Derek, that was a nice actually segue for my next question, which is, for a clean energy startup evaluating alt VC, what are the top 2 or 3 specific actions they could take right now to strengthen their readiness and stand out to mission-driven funders or government agencies like the iBank?
Mm-hmm. Yeah, I think more along those lines. I think not every mission-driven funder is different, but I think it's probably safer to assume that they are all different because that's how you can do these exercises where you kind of map out, again, the analogy with your startup, like what's the total addressable market for this investor? What's their scope? And that's how you start to find out which funders are most closely aligned. And you can try to refine your pitch to emphasize what they care about the most. At the same time, I think it's important not to change your focus on what you're doing just to match that profile. It's a matter of like, okay, this is what's true to me, and then based on that, I'm sticking to this. What are other people looking for, and then how do I emphasize what I am going to do anyway to make sure that they hear the messages that they need to hear. Because I think that authenticity or that lack of authenticity really comes across And these funders see so many different prospects throughout the day, and they are looking for, I think, generally, they have a fine sense of their sweet spots. So I think if you hit those points with passion and with clear conviction, that will shine through. And it's similar for government grants too. I think you know, the earlier you get to know the people at the agency that help make grant programs, ideally before solicitations are out, the better. And that's not against the rules or anything. You're not you know, altering things, but like the more knowledge you have earlier, the better, so that you have realistic expectations of your chances for a given grant. You might give them ideas for how they might shape the grant in general in terms of sectors or areas they haven't thought of. So it's only really a good thing to know more people and to get on their radar earlier, and then it's just the best use of everyone's time.
Great. And then Mark, how does that differ at all from the approaches that you would think your background that some of the folks here should be thinking about?
Not a lot. I mean, and I think it's important to recognize, even if you're looking at traditional VC funding, you know, VCs are not monolithic organizations that are all identical, right? There are seed stage, there are early stage, there are climate focused, there are, you know, there's specialty funds in a lot of different places, or specialty funds within many portfolios, right? That go and do that. So it is really, I mean, it's amazing how many people will send you know, send me stuff about medical technology, you know, because they saw a list of me, my name, or on a VC list somewhere, right? And we don't invest in medical technology or anything else like that, right? Maybe it's because, you know, Gates Foundation does a lot of medical work, and there's a crossover. I have no idea, but it just, you know, it shocks you, you know, and those go straight into the waste bin. So do your homework and understand what's there. The idea of, you know, meeting people and engaging with them, you know, I talked about that a little bit. My favorite quote from one of my former colleagues at RPE is that, you know, funding is a contact sport, right? You've got to go out there and bump shoulders with people and get to meet them and get to know them and get to validate your ideas, so that you know, and you have to listen. You have to listen to what they're telling you and really take that in. And the point Derek made about authenticity is 100% correct, right? It's just that becomes, it's so much clearer when you're speaking your message than when you're trying to force fit something. Everybody can pick up on that right away. So be yourself and find the right place for it, and that takes work sometimes.
If I
Sorry,
saw
Mike,
you, go ahead,
do
Derek.
you mind if I forgot to add, in the spirit of you know, doing your homework, just so people know what iBank offers. Our venture program is mostly backing the fund managers. So we are investing in venture funds that then go out and find the startups. So we're not actually doing a lot of direct funding into startups. So I'm saying that not because I don't want to talk to people, but just to set those expectations again, that most of what we're doing is through other VCs, and then you can go talk to those other VCs. But I think that's important. Those are the types of details that you get to know, where we're not trying to not make these relationships, and we still do want to talk to you, but the way things are set up, we have the funding flows through different channels. So those details do matter.
And Dave, I saw you nodding your head quite a bit to both Mark and Derek's comments. Anything stand out to you you want to emphasize, or anything to add?
When we advise folks on pursuing either catalytic, philanthropic, or even grant funding, we usually say stick to the 80-20 rule, right? Where 80% of the grants work, or the foundation's mission, or the investment firm's goals align with your corporate trajectory. If that's not the case, it's probably not worth your time to go after that kind of funding. It's not going to be a fit for you. It's not going to be a fit for them, and you're going to spin a lot of wheels and use a lot of revolutions to get nowhere. Find the people that align with your corporate trajectory, and then leverage what you have to get them to invest, rather than trying to, again, pivot your business in order to fit investor specific goals.
Thank you. Mark, clean energy R&D often runs on extended timelines and can be very capital intensive and slow to commercialize. How can entrepreneurs structure their pitch or highlight key milestones to demonstrate progress and maintain investor confidence over the long term?
Well, a very true statement and a very challenging question, right? When Breakthrough was first set up, one of the things we did was go look at sort of clean tech 1.0 and 2.0 and say, why weren't these as successful as people thought they were going to be? And one of the answers was because it takes a long time to do this, and it's to some extent outside the standard VC. So if the one thing you could say that was an alt VC option at Breakthrough was, we originally set up the first few funds as 20-year funds so that there's not a push for an exit really quickly, right? And to give people an extended timeline. We've now moved to a more traditional sort of 10-year time scale on that, in part because we were the only ones doing that, and all our partners needed to get out of these investments. So we weren't really, it didn't give us a lot of advantage, but I think it set a tone that said, you need to be patient around these things. And I think I've heard people say that Clean Tech 1 and 2.0 were actually okay if you waited long enough, that some of those returns did come in and it looked pretty good. So that's kind of a macro view, but I think on the short term thing, I think the thing you really need to do is figure out what are the most impactful validations, experiments, demonstrations you can do that de-risk things the most, right? Because what that leads to is value inflection. If you get through the hard things, it's very easy to write a research program and spend 2 years doing the things that you were pretty sure were going to work and never get to the part that is really the essential challenge of what you're trying to do. And if you keep pushing that off, you're going to become, you're not answering the question, you're not showing the progress that people would want to see. You've got to kind of tackle those hard, you've got to identify what those things really are, and then tackle them, sort of expeditiously and with full focus and intention. And that's what gives you sort of the, okay, now I've differentiated myself from everybody else who was still trying to solve this problem, as opposed to saying, I'm identifying the same problem everybody else has seen, and here's my solution, right? You want to be the one who gets past that gatepost before anybody else does, and can defend it then too.
Great.
On that note, if I
go
can
ahead.
jump in there, like having a well-built financial model and impact model for your business is essential there to be able to show investors. Like understanding how dollars in translate to either impact out or financial returns in the long term, and having clear financial forecasts is one of those tools that if you invest the time and resources into building it the right way, that will yield dividends in the long term for your business. On that note, like a little bit of promotion for Enduring Planet while I can. We do have a fractional CFO business that builds these kinds of models for climate companies. And as well as our lending business, like we would love to work with a lot of folks in this network. On that, I've been told I'm allowed to do this, but we're going to offer a discount to both of those services to folks here and in the Calci network. So we'll give you a free month of CFO services or a half a point off of our origination fee. If you guys just let me know that this is how you heard about it. I'm Dave@enduringplanet.com. Really easy to get a hold of us, and we would love to work with all of you.
Great. And I want to jump into some of the questions that are starting to pop up. If you have questions, there's a Q&A tab, should be at the bottom of your screen. If you could put them in the Q&A as opposed to the chat, it'll make it a little bit easier for me. But the first question I'm going to take was from the chat, and for Derek. Is there a list of those VCs that you referenced that are supported by the iBank Expanding Venture Capital Access Program?
So we don't have a list right now, and the reason for that is some of the venture funds are still fundraising, and venture funds are often kind of sensitive about their LPs or limited partners like us. But we can share that information publicly in general. So I've actually shared the links for the 4 venture funds with the moderators here, so they can share those out, so you can see who we've invested in. But I think in the future, as we'll put out press releases for groups of these funds at a time, so you'll know who California is involved in. And then we'll kind of build that up over time as well to see like how can we kind of bring together these different venture funds so that California can add some strategic value to how they work together to support entrepreneurs.
Hey, looking at some of the questions, the first question I think goes beyond the expertise of this group, but I'll throw it out there in case anybody wants to jump on this. What approaches do you recommend to reverse California's nuclear energy moratorium? I know, Mark, I know that I think one of your principals has been involved in new versions of nuclear, but I don't know if does anybody want to jump on that?
Well,
I'm
there's
not
actually there's a lot of we have a couple fusion companies in our portfolio. So
right.
not fission, but fusion. And so there's a lot of interest in that potentially being uh, a part of a future energy landscape and some promising developments that have come along. We're a long way from anything yet, but things are more exciting now than they have been in quite a while.
Great. Next question. We currently plan to go after public funding and are concerned about pitching our solution to investors who may see the new administration as an uncontrollable risk. How can we defend that? How can we defend that funding will be okay to investors?
That's a tough one. I'm getting that question almost every day now from not only from within our portfolio, but from people who are potential, we syndicate all the deals that we do and people who are looking at trying to come in and trying to understand what's really going on, right? And the answer is the honest answer is nobody knows. But as I said earlier in the session, one of the things that I point to is and again, this was sort of as I was leaving Stanford in the first year of the Trump administration, we had a big workshop on batteries that was an event New Energy Nexus participated in. But we had the Undersecretary of Energy who was there in a Republican administration who got up to say, look, he was previously an energy trader, and he'd just seen a bunch of bids come in Colorado for new power generation. He said, gas can't compete. Solar plus storage wins the day, even in Colorado, right? And it's the economics that drives this, regardless of what people may be saying, what the ideal policy is, right? I've talked to plenty of other people who've also said, as much as you want to open up the Arctic Wildlife Refuge to drill, it's too expensive and there's not as much there as you think there is. So nobody's going to go. Nobody's bid on these leases. So there's a lot of things that are kind of for show. The reality is understand the economics underneath that, understand what's the value you can bring. And if that's compelling, focus on that and tell people, you know, things change in DC every day, every 4 years, certainly, every 2 years, certainly. But if you've got something which is valuable and it solves a problem and is going to be a long-term winner in this, then keep going and ignore the sideshow.
Be able to show your investors what the model looks like when you do secure public funding, when you don't secure public funding, what your growth looks like in both scenarios. Be able to show like how you're mitigating that risk internally so they don't have to ask you that question as you're pitching. So say, hey, we're going after these federal grants. We understand that they have some inherent risk because of the new administration. If we're able to get this funding, we're able to put steel in the ground in these three areas. If we don't, we're going after this kind of concessionary or non-dilute capital in other markets. Like it's your job to pitch to get ahead of the downside risk so your investors don't have to ask you that question.
I think one thing I'll come back to is that, we've seen lots of companies, and I've worked with others even in, early stage that will go out and they get a grant that focuses on what they do. And then they start to see, oh, I can grow my team if I get a few more grants and start to build. And unless it's like really center of the fairway for what it is you're trying to do, you'll often find that trying to grow that way through federal grants comes with obligations that you've got to perform something that you said you were going to go do to. You don't have necessarily the same flexibility to change a business model or to pivot the way you would without that constraint. So often you can sort of steer people and funds into dead ends that you have a hard time getting out of. So make sure it's really, really well aligned with where you're headed anyway. And don't get distracted by the opportunity because it looks like there's dollars there. Just keep the focus on what you need to do to move the technology and the business forward.
Great. And then as a reminder, if you have any questions, if you want to just put them in the Q&A tab at the bottom of the screen, I can see those fairly easily. I'm hoping this next question, one of you will understand what it means more, more than I do. How do we finance TRL-7 FOAK pilot worth $20 million? DOE was the only way, but those FOAK grants are currently TBD as we look forward. Who knows what an FOAK grant is?
First of a kind.
First of a kind financing.
Yes.
There's folks looking in
Okay,
this.
I was thinking it was some kind of technology. Okay, thank you. Go ahead.
There are a lot of project development firms that are starting to explore how to finance folk projects, right? Folk meaning first of a kind. If the acronym soup is too much for a lot of folks. Mark One is one that's launching soon. There are a lot of project development firms and project finance organizations like Ezra Climate out there as well that could look at these kinds of technologies in the TRL-7 and above. The money is out there, and it was something upheld by DOE, but also pivoting the way you talk about your project to align with the DOE's newly established goals is something that is potentially a good idea. So talking about energy abundance and energy sovereignty rather than green and carbon neutral or carbon sequestering, but making sure you're speaking the same language. And this goes to speaking with VCs as well. Making sure you're speaking the same language as the folks that you're trying to put money into your project.
Right.
Yeah,
Eric,
we've
anything?
done a lot
Or
of
go ahead,
work
Mark.
we've done a lot of work with companies that start with my ideas in a lab, got a couple of things, and I'll pick carbon capture as an example because it's an area I've done work in. And people will show a couple unit operations that say, okay, look, I've got a really compelling techno-economic model I can put together yet. And the first thing I ask them is, have you put all these pieces together into one integrated system at any scale yet? Because as you do, you'll find that sometimes there's things you haven't figured out yet. And so in things that were compelling, we would put a first tranche of funding in to get them to that point if they hadn't done it yet. Then when you start thinking about going to the next stages, understanding how do you know, how big a scale step can you take from what your pilot has run to when you get there. So if you're trying to build something that's a $20 million first of a kind project, I'm hoping that you probably did maybe $1 million lab pilot system that mimics that, and that you know what the scaling parameters all around that. What people want to see is that you understand the technology, the interplay between the different process steps, and that you understand what the scaling principles are, and you've gotten to the point where taking the step from where you are to this first of a kind commercial is something that seems as de-risked as possible, right? It's not like you have to invent something new to go from where you are in the lab to there, because now you've introduced another element of risk. Try and define as much as you possibly can, and that'll make it easier to find the funders who can do that. ARPA-E had a scale-up program. You know, ARPA-E is on the list to be zeroed out as just like it was 8 years ago, and they survived. Let's hope the same thing happens here.
Um, this is a good question. How do I approach a foundation that currently doesn't have open opportunities? And I think you might even be able to broaden that question. You know, if you're looking at people involved in VC who aren't accepting, um, you know, applications over the transom, uh, how do you deal with that? Or is it worth trying to come up with a sideways way into getting the attention of a foundation or firm that isn't currently accepting opportunities?
I think it's always worth trying to network your way in at any time. And I imagine there's a lot of similar dynamics for foundations and grant recipients, VCs and entrepreneurs, VCs and their LPs, where there's like these very contradictory messages that they get, where it's like, oh, you know, you're not fundraising right now, so let's not talk. But then you would also hear from the same people, oh, we don't invest in anyone that we just met during their fundraising period. You need to know us for 10 years. So it's like, So that those two things don't make sense together, but they start to more when you do this networking and build out those relationships. Who do you know who knows someone who knows someone? Like it's a lot of grinding and hustling, but I think it makes it more worth it if you are, again, strategic about who you approach and you start to get a sense of what's important to a foundation, for example, and why you really have something that would speak to them. So then, I mean, cold emails do work sometimes too. And so I think once you start to break through, you want to be ready when those funding opportunities are available.
What kind of partners or advocates for people's technology kind of make the difference to you? Or, I'm looking at Mark and Dave especially. You know, what type of entity or person can validate someone's technology in a way that really gets your attention and grabs you?
I'd say, a couple things that we've used, and so I don't know how relevant it is to the alt-VC model. It might be a little more mature than that, but we have a couple of partners who teach venture creation courses, one on the East Coast, one on the West Coast, and now one in Europe, right? And so we find that to be a great way of kind of getting in touch with what some of the new ideas are, getting to kick the tires on them a little bit, and getting to meet lots of people. I mean, a lot of us were early reviewers and mentors for Activate as well, who are now at Breakthrough. So it's just finding the people who engaging with the communities that are kind of trusted and known. RPE, going to the RPE summit and walking the show floor and talking to people about how they got their grants, right? There's lots of people you can see who have kind of had some success, and getting to know them and who they've known is where I sit now. A cold email doesn't always get my attention unless it's spectacular, but an email from somebody that I know and trust and have worked with in the past always gets at least a response, right? So and more times than any, forwarded to somebody who knows the technology better than I do, but at least it moves it along, right? So that's I think that's finding somebody. If you know where you're trying to go, finding somebody who's a good connection into that path is the best way to get there.
Couldn't agree more. We have an easier job at Enduring Planet in the sense that we fund against grant contracts. So it's already been pretty vetted by the time we see deals, in the sense that they have active grant or purchase orders with the government on the state or federal level. But we also have just a vast network of folks in climate that are always passing us opportunities or making sure that entrepreneurs know that we're available as a non-dilutive source of capital. But climate is, a big but kind of a small world. You end up going to Verge, you end up going to Climate Weeks, and you run into the same people a lot. And I would recommend making sure that you know the people that are in this ecosystem and understanding not only who can help you, but who you can help. People are so much more likely to want to engage with you if it's not always a one-sided transaction of how you can help their business grow, but also folks that are providing value back into the ecosystem.
Great. So I think this will be our last question, and then maybe I'll ask the three of you for kind of a lightning round of any final thoughts. But the question is, how do alternative funders think about crowdfunding? Do they like it because it shows community support? Do they not like it because maybe you only crowdfunded because you couldn't raise traditional funding? Crowdfunding, thoughts on that?
I think it raises a good point about signaling risk, which is like another thing that you might need to worry about, because as you decide whether or not to accept investment, if that investor is profit-driven, impact-driven, concessionary, grant funding, like that can mean different things to different investors. So that is something you do need to look out for. So in the case of crowdfunding, how I would think about it is, does it make sense? Is this like a product or idea that makes sense to be crowdfunded? Like if it's a smart energy efficient device that is targeted for mass consumers, if you got crowdfunding for that, that's a good sign because they're kind of like pre-sales, pre-orders. If it's crowdfunding for a utility scale battery plant, it kind of makes less sense, but like it could be great or it could be weird. So I think there's context around it.
Also understanding what crowdfunding looks like on your cap table. Does it make it a complicated issue for other investors to come in? Is it an easy single entity? Like understanding the effects of the investor being involved and how easy or difficult it makes it for other investors to play. I think is often underlooked when folks are considering